Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of October 28th through November 1st. Now, before I begin, make sure you guys are always reading the report first before you watch this TA video. Remember, I have way more details on what our actual swing trade ideas entail for this week. For example, I provide the exact option contracts that we need to be looking to execute on for each swing trade idea, or the exact 3-point game plan for each swing trade idea using equity. And that is just a small snippet of what the weekly report says, so make sure you guys are not only watching these TA videos. With that, let's take a look at the markets. So I want to start off with something a little bit different. I want to take a look at the overall bond market. Specifically, I want to take a look at the 10-year yield, or ticker symbol TNX. So again, this is the 10-year Treasury note yield. So as you guys may or may not know, we have seen the yield bottoming out in mid-September and seeing a pretty quick rise to its current highs. Now, from a long-term perspective, yields are down a lot compared to last October. Again, we peaked around kind of the same time back in October of last year, and then we had yet another lower high pivot point back in late April, and I'm going to be expecting a similar lower high somewhere in mid-November, or at least early November ideally. Now, with this rise in yields, if you take a look even at the 30-year, this is putting a lot of pressure on bond prices. Specifically, if you take a look at TLT, the 20-plus year Treasury bond ETF, TLT has topped out in mid-September, just like with yields bottoming out in mid-September, and then it has come right back down to this critical level of $92. So we're at a daily support level, which is again a pretty important daily support level that we've had back in June of this year. Now, it's not just TLT. We have seen this downward pressure on other Treasury bond ETFs like the 7 to 10 year, or ticker symbol IEF, and this one is sitting right at its daily 200 SMA, at least, where TLT has broken all of its major SMAs on the daily time frame. So again, quite bearish. Now, if you take a look at the other shorter term Treasury bond ETFs like IEI, which is the 3 to 7 year Treasury bond ETF, we're seeing a lot of downward pressure as well. However, as we continue to get shorter and shorter on these Treasury bond ETFs, we're seeing a bit better technical conditions. Like IEI here is still above its daily 200 SMA. And so that is kind of the major reasons why I've decided to add IEF last week on the CFO Discord channel. Right, we're right at this daily 200 SMA, and as long as we're able to hold it, we will be adding to that specific position. Right, now with all of this in mind, this has been putting some downward pressure as well to the overall equity markets. So if you take a look at SPY here, last Friday we had a pretty wide range as overall market volatility decided to rise up once again. And so with this candlestick here, we have a very nice inverted hammer candlestick, and that is with elevated daily volume. If you take a look from Thursday to Friday's volume, that is an increase in selling volume. And so we should be a little bit concerned here, as we are also sticking very and fairly close to this ascending support trend line, which is a bigger part of this macro wedge chart pattern, or this rising wedge chart pattern that I've outlined last week. And so if we were to break this rising wedge, then I would love to see the price coming back down to retest the rising daily 50 SMA, and also at the same time, if we do lose the daily 50 SMA, if we see market volatility expanding rapidly, we can see the price breaking below this daily 50 SMA and retesting the previous all-time high significant resistance level, now a support level, at $563.50. And once again, if we do see this retest, I want to see an immediate pivot back to the upside to eventually retest the 578.50 level, and at that point that should become a major resistance level since the price is staying below the 578.50 level. And again, as seen here from this price path structure, which I've drawn a couple weeks back, we want to see the price ranging in between these two levels. That will be our ideal scenario. But if you decide to make, for example, higher lows and eventually higher highs, then I would love to see the price breaking back above 578.50 and eventually retesting the current all-time high area. All right, so that's what we need to be looking out for this week, for the price to eventually retest the daily 50 SMA if we start to see the overall market volatility expanding. And with that, let's take a look at our first swing trade idea. SMR. Okay, so this one has had a very explosive breakout to the upside, backed up with some very, very big volume, right? And so if you guys missed out on the overall theme that has been occurring, well, you guys should know that nuclear energy has been a major theme for the past couple of weeks. And for the few weeks or so, we've been seeing a lot of bullish flow going into a lot of nuclear energy names, and including even the uranium names, right? Since they power the nuclear reactors. And so SMR is a fairly new company here with a lot of hype. I would say it's a fairly new company with a lot of new hype, as this is the nuclear company that is looking to revive the small, I believe it's called small modular reactors. And this is not new technology, but it seems like companies are beginning to find a newfound interest in these small modular reactors. Now, I've written a lot more on what these are in the report itself, so make sure you guys go read that first. Now, from a technical perspective, SMR is setting out to be a very, very good looking, high and tight momentum bull flag here that can create another, yet again, explosive move higher for possibly a second leg up higher compared to this daily candlestick's initial leg up higher. And so this October 16th breakout has allowed the price to kind of move sideways afterwards, as we've kind of ranged from the whole number value of $20 and right between this $17 daily level of support. Now, this current sideways or consolidation phase has allowed the price to kind of move down in a descending manner, and this in itself can be considered a descending channel, which is also considered a bullish chart pattern. So with this complementing bullish flag and bullish descending channel, there is a good opportunity here for the price to break out once again. Now, if we take a look at the 2-hour time frame, right, this is very important here. We are seeing the price sitting very close by to the 2-hour 10 and the 21 SMAs. Again, my 10 is my red line and my 21 is my light blue line. And this is fairly important to look out for on the intraday time frames, because it clearly indicates that bulls are still very much present during this consolidation time and phase, and we want to be seeing the price consolidating within the parameters set up by this descending resistance trend line and this descending support trend line. And as long as we can continue to see the 2-hour 50 SMA, this dark blue line, continuously rising up higher and higher and higher, and eventually retesting with the price, we can see an overall bullish momentum coming back into the stock to be able to see a breakout out of this bull flag or descending channel. Now, as drawn here, this is kind of what I want to see for the price in the next couple of weeks, or even maybe just this week alone, as we see another retest of this descending support trend line, and at the same time a simultaneous retest of the 2-hour 50 SMA, which will allow a massive pivot on the intraday time frames to retest this descending resistance trend line and eventually consolidate even more until we're able to break out with a lot of good volume. All right, and now there is a resistance around 19.50 on the intraday time frames, which I'll also highlight right here. So if you want to wait for a confirmation entry point, I would highly recommend you guys to long an entry point over 20.55. Why is that? Well, if you take a look at the most previous pivot high point, which is at this 2-hour candlestick, the high is at 20.35. And so if you want that actual technical buy point of an actual breakout, you want to get an entry point over 20.55. Now, if you want a earlier but riskier bounce entry, like I've described right around here, okay, a long bounce entry at 17.10 would be pretty good. And you want that entry point to occur once the price has come back down to retest this descending support trend line, and it's able to pivot back up higher and moves back up over this daily support level at 17 bucks. All right, so those are your two entry points that I've given you guys. If you guys want to take a look at the exact stop loss points or even the profit targets, make sure you guys go back to the report itself. And last but not least, we have UPST. Right, so we're taking a look at this again after our initial swing trade idea that we had around this week, where we saw that explosive breakout to the upside that we were a part of. And so again, congratulations to anyone who was a part of this very, very good swing trade idea that allowed UPST to have a very nice explosive move to the upside. Now, to continue this explosive run up, we're seeing the price consolidating in a very similar manner to our very first swing trade idea for this week, SMR. We're seeing a very nice descending mode of consolidation where we have formed a very nice descending resistance trend line. And so you can put another descending support trend line here, okay, if you want the full picture of this analysis. But overall, okay, it's a very, very similar chart pattern, a very nice descending channel and a very nice bullish flag. Yet again, complementing bullish signals from the chart patterns itself. Now, there's a very, very important technical area that you need to be watching out for. This gap up area. Yes, it's a very tiny gap up area, but it's a fairly important gap up area that you need to be looking out for. So, since this is a very similar technical analysis chart pattern as with SMR, we're going to be looking at the very same price action as well. So if the price continues to move down within the parameters set up by this bull flag or this descending channel, we need to hold the lows of this gap up area. And I've given a little bit more room than the lows of this gap up area, since on this daily candlestick, the low of the day was at $48.54. I want to make sure that we have enough room to at least retest the whole number value of $48, which is the reason why I gave you guys a earlier but riskier bounce entry at $48.10. So hopefully and ideally, we do not come back down to retest $48, since again, ideally we want to see the price holding above this gap up area instead of trying to fill in this gap up area. And at that point, if we do reach $48, we would be beginning to fill in this gap up area. But again, if you want to see a riskier but earlier entry point that can work out very well for a potential pivot back to the upside, a very rapid pivot, we should be seeing a good entry point at $48.10. And at that point as well, simultaneously, we should be seeing the daily 21 SMA catching up to the price and possibly even seeing a simultaneous converging pivot and retest at the $48 level and the daily 21 SMA. Now, you guys might be wondering, well, Andrew, won't the price be below this descending support trend line? Now, from a visual perspective, yes, right? But at that point, it will be a very, very tiny peak below this descending support trend line, which will provide, hopefully, a very, very rapid pivot back towards and back inside this descending channel or this very nice bull flag that's beginning to form here on the daily time frame. And that's the reason why I've also mentioned this daily 21 SMA to catch up and converge with this $48 support level to provide more momentum and more bullish bids to come in to allow the price to pivot right back to this descending support trend line, right? Now, UPST, just like with SMR, has been showing a lot of relative strength even during the market volatility, as we've been seeing this very nice descending and controlled consolidation. Now, how do we know it's a controlled consolidation? Well, just take a look at the overall volume after this explosive breakout to the upside that was also backed up with immense amount of buying volume. We've seen a very good drop-off in volume, which also indicates that there has been a drop-off in interest, which will provide the energy to come back in for another second leg up higher and out of this daily bull flag or descending channel. Now, if you were to break out of this daily bull flag, okay, we want to see a long-term breakout entry point over 54.55, which will also be over this major resistance level, this horizontal resistance level at $54.50. Again, it's a whole number level. And if you want then, again, the technical buyout area, okay, buy area of 54.50, you want to make sure you have that confirmation by longing the entry point at 54.55. All right. Now, if you guys want to take a look at the stop losses given for this swing trade idea or the profit targets for this swing trade idea, again, make sure you guys read the report first. All right. That is it for this video. If this TA video was very insightful and most importantly, applicable, make sure you guys leave a like down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button. Now, if you're watching this video when it became public and you want to watch this video a day earlier when it's private, make sure you guys join the CFO Swinger Watch Report and become a member of the private CFO Discord, because you can get 50% off for your first 30 days. It's a first come, first serve basis. So all you need to do is DM me on Instagram at ChartsFocus1. Again, my handle on Instagram is at ChartsFocus1. Okay, that's all you need to do to claim your spot. All right, good luck, and I'll see you all tomorrow morning.